Yo, what's up, YouTube? Hi, hey, what's up? Hello. We are recording Tuesday, March 25th, for day trading. That's what we're looking at, right? We have today, or I'm sorry, we have yesterday, we have today. We marked out some fair value gaps that I do not believe got hit at all. So we're gonna take this one step at a time the way we've been doing. We're looking at the daily. And we see here a break of structure. What makes this a break of structure? It closed above this high right here. How you identify a high? Up, down, high, boom. It closed above it. Ergo, we have a well-defined break of structure on this candle specifically, and that was Monday's candle. So what exactly am I looking for at the moment? I'm looking for not a liquidity sweep, but a sign of continuation. What's a sign of continuation? Our signs of continuation are fair value gaps, breaker blocks, order blocks, or equilibriums. Right? That's what we're looking for. You guys ever have that feeling after eating peanut butter sandwiches? Just peanut butter, no jelly, maybe the honey peanut butter, right? You ever have those feelings where you eat them, you're cool for about an hour and a half, and then immediately after, you got a burp. It's a monster burp. You know it's going to be a monster one. It's going to smell nasty. But that's how I feel right now. Not nauseous, but gassy. Not even constipation either, just burp. Either way, yeah, we have well-defined break structure on both. What I was going to say is our signs of continuation. I want to go ahead and clear all of the drawings because guess what? We don't need them. Right now, anyway. We're building up to the rest of the drawings. Assuming this right here closes, this is going to be our fair value gap. This is our sign of continuation that is going to continue moving higher, right? Off of this liquidity sweep down here. Because as of this liquidity sweep, we have not seen a fair value gap until now. And this will be further diagnosed at the start of the day. So what exactly am I looking for here? I'm looking for exactly that, a fair value gap. I'm not seeing... So on a downtrend, a breaker block is a failed retracement, which means we need to be looking for an up candle. An up candle, or two, that symbolize a failure of movement. I believe this right here would have been it. This leg up caused the liquidity sweep down, so that would be wrong. This would be our breaker or order block. That's what this would be, right? So what exactly am I looking for when it comes to a breaker block? Something like this, actually. It's a failed retracement. Shows a lack of buy orders in the market in a downtrend. So market makers had to use the lows to fill these orders, pushing price down further. As a result, we had price move down, but it wasn't for long because guess what? We got our order block right here. Once that order block kicked in, we're going to sweep liquidity, use the orders above this high here, and force price higher. As a result, we have price moving higher. From that, we got a break of structure. Again, this is on the daily. This is using our confluences to identify what the day is going to bring us, right? And we're going to hone it all the way down so that way it's not a matter of guessing whether or not price is going to go up or down. It's a matter of knowing off of the data shown from previous days. As you can see, we had a similar issue here. We had a breaker block. Price moved lower. That was our imbalance. Price kept moving lower because it showed that. As a result, we had an order block here. Liquidity sweep, and it was more defined on the S&P 500 than it was the NASDAQ. Well-defined liquidity sweep, push higher, no fair value gap, none, until right here. And it has not been identified as a fair value gap yet because guess what? Today is Tuesday. Price has all the ability in the world to either continue moving down or continue moving up. In either case, we are looking for this candle not to clear this. Because if this candle clears this, there's still no balance. There's no imbalance to it. Price is drawn to fair value gaps. Why? Because it's a lack of orders being filled. Well, there are two sides to this coin. Just like how breaker blocks are imbalances, showing the lack of specific orders in the market, guess what this does? This is also an imbalance that, you know how you multiply negatives? You multiply a negative by a negative, you get a positive, right? Same concept, same grasp as far as I'm aware and concerned and have learned. We have an imbalance here, lack of orders. We also have an imbalance here, but wait, that doesn't make any sense. Why doesn't it make any sense? Because, well, we had a filled fair value gap, which means, fine, this works. This fair value gap was balanced out, but this wasn't. There was no price moving up into this breaker block, and it wasn't disrespected until, boom, we got a fair value gap, assuming this closes right where we want it. The price doesn't come all the way down here, and we actually have a gap here. It closed above it. We got a breaker structure. We got a fair value gap, assuming this doesn't reach all the way down here. And we got a rebalance of market. It filled the breaker block. That's three confluences right there of well-defined meaning of continuation. We have, guess what? Continuation confluences. Price is going to move higher. How much higher? We don't know. We're going to take a guess and gander, right? Because we've already moved past this high. We're not looking to take profit off of this. We're looking to take profit off of here, maybe all the way up here. It could be any one of those three. That's where price wants to move, and that's on the daily. But we're not trading on the daily. We're trading on the minute. We're trading within the trend. We're trying to get as much money off of this trend as possible, and that is per day. So, what are we looking for? We're looking for specifically on this candle here, this candlestick right here. We know price is going to continue higher per the day. So let's move on down to the 4 hour. Boom, boom. Yay! Did I remove all the colorful stuff from this one? I did. Did I remove it from this one? Yes, I did. Cold, hard money cash, grabbing scheme type of gist, strategically going about my day as though things work. Before we get too carried away, before we get too insane, let's go down to our 30-minute right quick and actually mark out sessions, because I don't want to miss my opportunity. I'd like to know when market opens. I'd like to know when it closes. I'd like to know when I'm getting the money bags, because the money bags are what's needed. Vertical line, boom, we have 20. Boom. And we're going to change that, actually. This goes to black, because I like the color black. If you don't like the color black, you are not slick at all. Anyway, we have 8 o'clock. Where are you at? Boom, 8 o'clock. And we're going to go ahead and go down to the 5-minute. Move over a little bit. Boom, 9:50 is our time. Not 10. We want right there. Boom, 9:50. We're going to make this our green, or actually, no. I like the way it was before. The gray line of yes. We don't want to do anything before this. We're just identifying stuff up to this line here, finding a high and low. At that point, we're in this zone right here. This is our pre-market area, right? When this pre-market hits the way we want it to, we are going to identify some building blocks within it, further get a hold of that price range the way we want it, and from there, work our magic. From here, we go to S&P 500. Boom. We're going to go down to the 5-minute, same way here. Boom, this. Don't mind the TV. It just turned off because I was watching a tornado video, and it was actually pretty entertaining. Interesting how some of the foreigners on YouTube react to some of the craziest weather we have over here in America. Makes me want to become a storm chaser. As dangerous and as interesting as that sounds, as expensive as that sounds, that is one very expensive hobby to have. 20 there we need to change that. Actually, this needs to be this, and then we're gonna go this way. I am on the wrong time frame. That's why it's so difficult to find this. 4, boom, this 8, right there. Good. We'll zoom way in, knock down 5, grab this, go to 9:50, which is right there. Good. Well, actually, I don't know why I clicked off that. We can change that to our gray beam. Did I select the right one? Does that look about the same color? I don't care. They're roughly the same color. From here, we're building blocks. London session has not closed. We have not entered pre-market. However, at the same time, I'm looking at the hourly. 1. It looks as though we are within, what's it called? Australian? Is it Australian session? Between London and New York. So this candle and this candle specifically are Australia session, right? As a result, we're just waiting for that to close. So, by default, we can already go with what we have. We have, and we're going to mark this out nice and firmly. We have, how do you identify a low? Down, up, boom. We have a low here. Actually, the lowest point's right there on the green candle. How do you identify a high? Up, down, highest point right there. Actually, up, down, highest point right there. And yes, we're counting that because that is the highest point that this has gotten to. Price is taking a rip. Are you guys seeing this? Down, up, lowest point is right there. That nullifies this. We don't need that. And how do you identify a high? Up, down. We haven't made a down candle yet. This candle is still forming and is making a whole new high. So guess what this does? Don't need it. This line's going to change before pre-market. We'll change that on the 30-minute. Let's go ahead and actually bring this to light because we've just been ripping. That's all we're doing right here. And there's no imbalance in this either. I don't know if y'all are able to see that or not. Like there's an inverse, there's a fair value gap right here, right? But this is also the same candle on the hourly that we broke structure on for the uptrend on the downtrend leg over here on the daily. So actually, I'm wrong. I'm wrong entirely because we broke a candle, but it wasn't just on this. It was on all of this. This huge up was the break of structure we needed to go into our uptrend. And we have confirmed that price is, in fact, going to move much, 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 much higher. However, I'm looking at price action. I'm looking at this. I'm looking at an imbalance right here, right? Price is drawn to imbalance. This filled a breaker block, so we cannot count this as a legitimate fair value gap. We can count this right here. No, we cannot. Why? Because it's inverse fair value gap. What is inverse fair value gap confirmation of? It is, guess what? Confirmation of reversal, which means we had to sweep liquidity up, down, pop, up, down, pop, sweep liquidity. So what do I think the price is going to do in the coming hours? I think it's going to dip. How far down? Into this fair value gap. Oh, wait, we can't count that. So where to? That's a very good question. I very much think it's just going to continue down. So I'm going to stick with that bias. Let's do the same thing on the NASDAQ and get the same confluences going, same confirmation, same everything. Let's get it fine-tuned because we don't want to mess up. Boom. High identify high, up, down, boom, high, right, there, gold. And we're looking for a low, down, up, low, there, boom, yes, gold. Same deal, down, up, low, there, different candle. Do we have SMT divergence going on? We look like we do. What is SMT divergence confirmation of? The reversal. So I think we are actually about to move back down. We're about to move into a downtrend. Not in a downtrend, because we are, well, in fact, on an uptrend. We're just trading within that retrace, right? Because it's got to come down before it's got to go back up. You get the point. We also have an inverse fair value gap right here. That's further indicative of price moving much, much, much lower. Just pointing that out there. And this right here could be one massive order block. It's starting to look like an order block right there. And that's another sign of continuation. Price is going to move down off of the inverse fair value gap and the SMT per these two candles right here. In either case, we don't care about this low. Why? Because it was moved past. And again, we're going to mark this right here. Boom, our high. Yay. We don't care about this high. Why? Because it was moved past. We're going to get rid of you. Yay. We now have our price range in which price ought to move and where we can build our building blocks. We're not going to go crazy. We're not going to trade. Actually, let's go ahead and figure that out. Are we going to trade today? Because yesterday, on the same video, if I'm not mistaken, news changed before market open, right? We had President Trump speak, and we had a huge amount of FOMC folders. Let's see what it's doing now, because I am very interested. We have Forex news. Hello, unholy light of God. Nah, I'm messing around. God's light is absolutely holy. Yikes, 8:40 a.m. FOMC member Kugler speaks. I don't know if that's the correct way you name that. Yeah, we have that one. We have HPI, S&P. Is HPI part of it? I don't know. We'll check our folders here in a second. We have FOMC, remember Williams speaks. And then we have CB Consumer Confidence, orange, orange, orange. CMI. Okay. Or actually, that's not CMI. That's RMI. My bad. Let's go to our notes. We have CPI, PPI, FOMC, NFP. Would that be the case? Let's see what we've got. Let's actually keep this note up. So I'm showing this. We're gonna... How do we do this? Hot dog. There we go. And from there we come back here. Yay! You can see what I'm seeing now. Can you match the folders? Right now, all I'm seeing is this one right here. This is called FOMC. We have one folder, two folder, and that is it. The last time we found FOMC, that was the previous video now. That was yesterday's video, right? We identified that on FOMC, two of them. Doesn't matter how many FOMCs present, guess what? Price is going to go crazy. It's going to hit a key level, and it's going to dance on that key level. And then it's not going to move. It's going to move up, hit a key level, take profit, whether that be a short or a long, right? It's going to hit one of those take profits, and it's going to come right back down and stop us out. That's what we learned from last video. With that being the case, we're going to close that and then go back into this. I don't need that anymore. I'm still recording. Want to minimize that. Gold. That being the case, we're looking specifically for price to continue moving down. Why? Because we have continuation confluences here that, yes, price is going to continue moving down. We'd actually like to take a trade today. I want to take a trade today. I know it's bad of me to do this. I want to take a trade. I want to. Want to get that bread. Comment section. I want to. If you're interested in seeing me get that bread, like the video, because guess what? I'm posting this every single day until I get bored of posting this kind of content. And then I might actually do some reaction content, because in all honesty, I feel as though I'm not reaching the best potential because I'm streaming in the middle of the night. I'm posting that video in the middle of the night. I'm then getting back on to post a video midday. But the midday video isn't the content that is my bread and butter on YouTube. This is primarily meant for me to learn how to make money off of, guess what? Day trading. This right now is more of me taking notes and getting that situated while also learning at the same time. Getting things under wraps and actually having that there. This is my personal YouTube. I put stuff here. It's public. So even though like I make a mistake, it's public and I'm not like, you get the point. Oh, there it goes. Price is going down. What do I think is going to happen? I think price is going to move down. And it's going to sit here and do this. It's going to hit that. It's going to come back up and dance around this low. When it dances around this low, it's not going to move anywhere else. So what is our best option when it comes to this? I'm tempted to say, and a valid potential strategy, though it's only going to make me a little bit when I do a long position. I know what I just said. Go for a short position. Price is going to go down. We have confluences. Price is going to go down. Well, yes, you're right. However, price is not going to continue going down. Why? Because this fair value gap right here was to fill the breaker block. The breaker block was a sign of continuation that price was going to move down. We got that move down. We also had a reversal sign, and guess what? Price moved much higher. From that reversal, we also got this fair value gap. But again, in the context of what has happened on the daily, we broke structure to the upside. That confirms the liquidity sweep down low, the reversal sign down low. As a result, guess what? Price took a hike. From that hike, we got the break of structure, confirming price is going to move higher. We have our liquidity sweep on the same note of the break of structure per the daily. I said liquidity sweep, fair value gap. We had a fair value gap on the same break of structure. Double confirmation. I don't know what else is. We can't use the fair value gap, though, because guess what? It was, in fact, filling the breaker block from the previous leg up. So we have to completely remove this from the factor. Like, get rid of it. We don't care about it. What we care about right now is where price is going to go per the day off of the influences we have minus that fair value gap, because it's not there. We can't use it. So don't even try. Look, even this right here, this is saying on the NASDAQ, we filled this even per this move. So we can't use this on either chart, not only because NASDAQ is telling us, hey, yeah, the imbalance was filled, but because the S&P was lagging behind NASDAQ so badly, it was actually the filling of the previous move. So we can't use that. Boom. We don't care about that. Blocked, gone. Out of this world. Bye, Felicia. Now what are we looking for? We're looking for the sign of reversal. What's a sign of reversal? Liquidity sweep. Where's our liquidity sweep? That's a good question. Let's find out. Down, up. Or, sorry, up, down. Because we are currently in an uptrend. Though we did break structure right here on this candle. I'm convinced this right here is an order block, and our liquidity sweep is right here. Why? Because we had a high here, and it was closed above. And we had a wick higher than it. Makes sense? Makes sense to me. We could also take into account this right here. We had up, down, high here, right? Then we had, guess what? Up, down, and instead of closing above it, a liquidity sweep. From that point, reversal, price moves down. We had a well-defined break of structure, signaling continuation, confirming this liquidity sweep up here on this high. So, from that move, I'm thinking price is going to continue moving down. It's going to hit this key level. It's going to continue moving down. That's my thought process. But per news as well, we are looking at 2 FOMC folders. So, what am I looking more so into? I'm looking at price moving down past this key point here. And for confirmation, I'm looking for price to hit this key point a second time, not after this trade, but within this right here. Within this candle and this candle, between these two zones right here. It's going to dance around and consolidate on this line. It's going to sit here for a minute. What I'm going to wait for is price to sweep on the upside to continue moving down. There we go. Boom. This might actually be a secondary liquidity sweep. This is our sell candle if we wanted to take a move. We're not. We're learning. We're looking. We're hoping, we're praying, we're right about this. All right. We're on the 30-minute. Let's go to our hour. Just because that's what the thing says to do. So we're going to go to our hour. Boom. Yay. Let's go ahead and zoom in there. Get it nice and full view. We want to see it all. Boom. On the hour, we wait for price to hit key level. Okay. We wait for this, though. This right here. Price has to hit one of the key levels after this open. Actually, if it doesn't, within here to here, that's okay. As long as it hits a key level, guess what? After it's time to look for a trade. Once it hits key level, barrel down into building blocks. Get it honed in, get it right, get it good the first time. From that point on, look for a trade. And it's going to be fast. It'll be fast that we hop on this train and we're going to potentially try and ride it. That's how it works. We confirmed it through the last video, though, that on FOMC days, we have a potential for price to dance around one of these. It'll hit the key level, and it'll sit there and dance. That's all it'll do. We are still in an uptrend. We did not break trend back to the downside. Why? Because we did not make a newer low. I'm not looking for price to make a newer low. I'm looking for it to continue down past this, right? Breaking the overall structure that this is going higher, right? We're looking for the break of structure on the downside for a short. If it breaks structure, I'm convinced it's going to continue moving down after it's hit this key level a second time, and it's going to continue moving down. In the event that we do not see either of these key levels hit, and instead within, again, this candle here, on the 30-minute, right, in between this green and this black line, in between this right here and over here, it's going to continue up past this. If it continues up past it, I'm expecting it to hit this a second time. We are waiting for price to hit a key level after it's time to look for a trade, not before. Once it hits that key level, I'm looking for a long position. Why? Because guess what? Price continued up in that uptrend pattern. I think price is going to go higher. But before we can confirm that, it needs to hit the key level on a retrace. We need to see it hit this on a wick. It has to be only a wick. If it closes below it, we know it's going to dance. It's going to sit here on this line for a minute. It might actually get all the way to 1600. I don't know what 1600 is. 11. This is the hourly. What am I doing? That's 10 right there. 11, 12. I'm not staying here past 1300, so that's 1 in the afternoon. There's no way I can do that. I have to sleep. I'm a human being. Shoot, this is also where I'm drawing a very, 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 very difficult decision line, right? Because I have the time to do this, but at the same time, I don't want to start over. I don't want to sit here and think, oh, what I've done so far has been for naught, and that I need to stop what I'm doing, turn around, and actually attempt something new. As appealing as that sounds to me, I also hate waking up early in the mornings. I'm just a different person. You're seeing the best of me now, being awake and cognitive enough to make the decisions I need to make at the moment to work my way through this day. Right? That is my current gist right now. With that being said, comment below if you're a person, not a bot. I'm talking and looking at the few comments I've gotten over the past couple of weeks where people are, the bots specifically, the scammers, are asking for financial advice when I've already explained I don't do that. Give up. It's not happening. Never will. Stop. That's not what this channel is about. Go away. For those of you who are human and actually enjoy this kind of content and or want to see me succeed at this and have your opinions on what I ought to do, subscribe first to know when I post, so you know when and if I have your idea in front of me, you see it. Like the video, because obviously I'm working with your idea. Why wouldn't you like your own idea? And then comment if I made a mistake. Help a player out. That's it. Have a great day. See you next time. We do this Monday through Friday. Right now, it's from 7 a.m. all the way to almost 11 a.m. that I record these videos, and it's not posted until 2 in the afternoon, 2-ish, 3 in the afternoon, if I had to guess. After these videos are posted and I've had my sleep for the day, I wake up at 7 p.m. and I wait. I will do research within 7 to 9 p.m. And after research is done, I go to streaming video games. Check that out on Orb's Vault for the streaming content, as well as those VODs. I know you guys like the VODs because no one likes watching hour-long streams. You like to skip through the video and get to the good parts. That's cool. If you don't like that kind of content, there's another channel you can check out, The Gaming Orb. Gaming Orb's got short videos, like sub 20 minutes. And if it's not sub 20 minutes, you can pretty much expect it to be anywhere between 20 to 25 minutes, no longer, right? And then from there, I get shorts off of them. Much shorter content, literally minutes, not hours, not half hours, like not 10 minutes either, minutes. Go check those out. Have fun with that. Subscribe, because we're at 379. I want to get to 1,000 subscribers. And for those of you who watch my Twitch stuff and know, hey, I'm doing stuff over there, right? Consider following that. Because guess what? I stream there Mondays, Fridays, and Wednesdays, 7 p.m. to 9 p.m. No deviation in that time. I'm actually tempted to do a bunch of other stuff too, so comment below. Comment below ideas. Comment below suggestions. Comment below. I'm open to suggestions. I'm not giving financial advice. Bots, screw off. I'm not doing it. You can give up. Not happening. In any case, welcome to Orb Plus, where we do day trading and actually mark stuff out. And we're getting good at it, actually. I honestly think I've done pretty dang well with how I've set up these charts so far. Usually, so the way TJR has it done, right? Because he does it before market open. Typically, that's what this setup is for market open. We mark recent lows. We mark much recent lows. We mark recent highs. based on the bias we have. We are waiting patiently. We are doing this strategically. How strategically? That strategically. We have spelled out what we're doing. If price comes down below this, and it cannot be a closure, if it's only a wick, right, sweeps this liquidity, I'm expecting price to move higher. If it closes below this, guess what? I think it's going to continue moving down. And so we'd be looking for a short. Okay? Okay. If after this line here, we have a closure above this white line up high, we are looking for a long position. Why? Because price is moving higher. We want it to come back down, touch this key point, and continue moving higher. That's how that works. That's how we're doing things. That's how we're going to have that taken care of. Okay? Okay. I think I've done all I can for now. What I'm going to do is I'm going to wait 30 minutes for this candle right here to form. This candle, and this candle, where the dotted lines are, right? So one before the black line, on the black line, after the black line. I think all three of those candles are going to tell us a story of where price is going to move per these three candles over here. From these three, we're going to be looking for a closure above the white line. If so, I think price is going to move higher, even more so than if I were to see a price move above this line on this side. If price moves lower, and it's going to be a huge candle going down, this is a 30-minute candle we're waiting on, just an FYI, huge candle down, right? We're looking for a closure below this fair value gap right here. This is a fair value gap too. This is not filling any other imbalance. I'm not seeing... Yeah, I'm not seeing an imbalance there. Unless this right here, this whole move down would be considered a order block because we're in an uptrend, right? This move down caused a liquidity sweep up on the high, and we did not sweep liquidity on any high. Oh no, we swept this one. But at the same time, that wouldn't make any sense because that would mean price is going moving down. And again, that's going to happen within this time frame right here, right? That's how we'll tell within this time frame. If this is valid and this fair value gap is like still there, I think price is going to continue moving higher because this fair value gap may have filled a breaker block in this, which I'm tempted to say it did because I'm looking at this right here. Both of these candles right here show indecisiveness in the market, and that one, there's a lack of buy orders, and so market makers use the lows off of this to push price lower, filling their sell orders. And from that, we have our order block right here, right? Our leg up that caused a liquidity sweep, boom, swept that liquidity, push price higher, boom. Did not sweep this, but it is in range of this fair value gap. It is not an inverse fair value gap because, again, we didn't have a fair value gap to begin with. But we did have, I think, a breaker block. Breaker blocks are sign of continuations. Fair value gaps fill those imbalances. From that, we see price move higher. So I'm more inclined at this very moment to think price is going to move higher. And let's check NASDAQ. Let's see what NASDAQ has to do. My opinion has flipped 3 times in the past 10 minutes, and we're still on the 30-minute mark, and we have not touched any of these candles here. We haven't. Same just happened, actually, right here. Now think about it. You see that? Actually, right here. This is the fair value gap on the other chart. We have 1, 2, 3 fair value gap. And then on S&P, we have 1, 2, 3 fair value gap. Same gist. Fair value gap here. This closure up above this. We had an inverse fair value. We didn't have an inverse fair value gap. Why? Because guess what? There was no gap right here. So it can't be inverted if there is none. We did have one right here, though. This is our inverse fair value gap. That's a sign of continuation of the price moving higher. This fair value gap fills, again, I believe it's order block right here. It goes from here all the way up to there, right? Actually, it goes up to there. So it fills this breaker block right here, if I'm not mistaken. And then from this, again, another sign of continuation. Boom, move higher. Once that's taken care of, gold. I think price is going to move higher. On both charts. I think that's what both charts are saying because it's filled its imbalances. There are no imbalances in this chart at the moment. As far as I could see, there is none. So, going off of that, yeah, We have an inverse fair value gap right here and then going down. This, per a large uptrend, tells me continuation. Price is going to go higher. We have an inverse here confirming that over there. Price is going to go higher. We didn't get that same thing right here, though. I don't know if y'all can see that. This right here is a fair value gap on the NASDAQ. It is not a fair value gap right here on the S&P 500. That is a telltale sign there are no imbalances at this point. And again, and again, and again, and again. I believe I showed it on this one as well. Yep. Both these are fair value gaps, but we only have one inverse right there on this because this closed above it. Boom. At this point, price is going higher, much higher. How much higher? Don't know. I'm tempted to say it's going to go as high as this candle wick right here, because how do you identify a high? Up, down, boom, first key level here. I think it's going to go as high as that. I think it's going to close and leave a wick above it, and what I think it's going to do per the FOMC is it's going to come down, potentially on the gray line we have set up for our trade entry. It's going to come down, touch our key level a second time, right? It's going to come down into this right here. It's going to fake out anyone who thinks this is going to be turned into a fair value gap. From that, because price is now at a discount per the most recent high, it's going to rebound and go past this. At which point, if we wanted to take a trade, which I'm more than likely going to today, just because I think I'm getting that good at guessing what price is going to do based off of previous price action, I think once it hits this thing right here a third time, so guess what? It moves up, touches, moves past, stops, rebounds, touches 3 times. I think this is an optimal entry to go in for a long position, because guess what? Price at this point is going to move higher. How much higher? Don't know. We're going to set our key stuff now. I think I'm going to go in on a long position. So we're buying in, comment section. We're buying in. We're going to go up to the 4-hour, get that nice and visible because we'd like to see exactly what we're doing. We're going to do this on both. So we are well within our means to learn what's up and where. How do you identify levels of liquidity? We need to find our highs. Where's our highs? Up, down. Actually, because this is higher, up, down, boom. First sign right here. Yay. We look for long wicks because there are a huge amount of sell orders just above those, and we want to stretch that extra mile. We have 1, 2, boom. And this is our failsafe. The only reason this right here is getting set the way it is because I don't think price is going to move all the way up here. This is crazy. I don't think this is going to work. That's just me. That's my thought process. That's how I'm doing things. You don't like it? I'm sorry. I'm working with what I've got. And right now, it's looking like price is going to barely, like per the FOMC, per Monday, right? I believe it was Monday we took that trade. No, it wasn't. It was Friday, last Friday, if you were here for it, because it wasn't yesterday. Today's Tuesday. Got to keep that straight. Friday, we failed a trade. It was a short position that got stopped out on the way back up because guess what? It danced around that key level 17 different times after we needed it to trade. We waited to the appropriate moment for that key level to get hit after trade time. We still got stopped out. The idea was wrong. Game over. I don't think price is moving up here. The last time I moved, I had a thing like this, right? It didn't work out. Why? Because FOMC. I blame FOMC at the moment. We're going to attempt to take this trade today. We're going to attempt to, even with the 2 FOMCs, because experiment, learning, and getting good, scrubs. That's our goal. Up, down, boom. That needs to move over. Yay. Boom. Up, down, high, boom. Yay, we have 3 highs up here. I'm not going to go higher. I will not go higher. Why? Because this is a downtrend on the daily, and it wasn't until right here that we broke structure. So, actually, yeah, this right here was the small candle. This was our breaker block on the downtrend. This right here is our break of structure on the uptrend, and we are actually on our way to breaking structure. So we actually need to wait for that. We need to look for that. We need to hold off, get that taken care of first, right? We need to look for price to continue moving higher and break the structure on this wick right here. If it breaks this structure, I'm convinced per the FOMC it's going to come down. It's actually, I'm tempted it's going to come between these two. It's going to be between these two. It's going to straight up just nick this with a wick. It's going to come down, touch our key level. At that point, we press buy because that is the retrace. Long position up. We have 1, 2. We don't have anything right here because we can actually identify that with... That's actually very hard to see. I'm not going to lie because there's nothing in between this. This is a huge inverse for value gap. So all the way through this price range right here, imbalance, which means price is going to move up within this price range specifically. It's going to touch, come back down, be done. I think this right here is a valid high, up, down, boom. Just to set our bar at a standard that looks appealing. I don't think we're going to hit 5 price points, but at the same time, I do think we're also going to hit at least 1, come back down, and hit maybe 2 a second time. That's the hope. That's the guess. That's the way I'm thinking. Let's do the same thing on NASDAQ. We were on the 4-hour when we marked all of those. Let's go ahead and get on the 4-hour for this one. Boom, boom, yay. How do we identify high? Up, down, boom. This right here works. We're going to go ahead and come up here. Got to go up there first. Yay, boom. I identify high, up, down, boom, high. Between these two, yay. Identify high, up, down, boom. Right there. Identify high, up, down, boom. There. And even on the NASDAQ, this is seldom, right? This is me being modest with my ability to check this, right? I still think price is going to move within this, come back down, touch this, maybe dance a little bit, at which point that should be enough time for us to go ahead and say, oh yeah, it's definitely going to keep moving higher. Let's go ahead and press buy as soon as it touches this again. Once it does, we take our first take profit. And this time, before we even get to it, because now we have our take profit set, we need to fix our stop loss. I'm going to fix my English here in a second, I promise. Where's our stop loss going to be? Because this was yesterday's price action, right? We never, like, this wasn't yesterday's, this was. Like, in this was yesterday's price action. This was Friday's that we lost. Right? Because we didn't enter Monday. We did not enter Monday. This has not changed since since Friday, since we lost that one trade. This is Friday that we did. This right here is Monday. Price continued higher. Yeah. Our guess was right on this, but it wasn't until after we had signed off that price actually went higher. So, with that being said, we're going to go ahead and shrink this back down, minimize that so it's out of the way first. From here, we're going to go down to the 30-minute so we can actually see what's going on close, right? We're going to keep our idea in mind. I'm going to pause the recording. What I'm going to do is I'm going to go to YouTube. I'm going to go to TGR Trades. I'm actually going to go to several different pages. I'm going to see exactly how they enter the market via a buy-in and how they partially close on the market so we can see where our profits are going to take us. Because I'd like to be able to get the money I invest back out, right? And I know it's per units. I know it's per something in this that we have to do that by. So, with that being the case, I will be right back. Okay, so I now understand, per my own research, how to modify my orders. That means when I enter the market, that is through a buy or sell. Doesn't matter what it is, just that it's buy or sell, right? I know that when I place a buy going higher, right, and I want to set my stop loss down low, or let's say a take profit up high, I know that when I enter the order, it'll have one line here. Yay. At that point, there will be two options out to the left. Take profit, labeled TP, stop loss, labeled SL. I drag my stop loss down low, put my take profit up high, preferably at my levels of choosing, right? At which point, I have to click Modify Order. That will pop up every time I move one of them. When I move them, I have to make sure to move both where I want them in order for the desired effect to occur. And after I move each one, to modify the order so I'm not losing out on potential profits, and so I'm not losing as much later on. Or getting stopped out too early in the trade, if that makes sense. Trade button in the account manager by clicking the plus button on the price scale. Or by right clicking the chart and selecting trade, create new order. That's how to open an order ticket. Okay, order ticket parameters. Once the order ticket is open, you can set the following parameters. Price, specify the price at which you want to execute your orders, limit order, price. Stop loss, set the price at which you want to automatically exit the trade if the price moves against you. Okay, take profit. Set the price at which you want to automatically exit the trade when the price reaches your desired profit target. Cool. You can set these values using either pips or prices. So either monetary money, like $20,000, right? Or I believe the easier method is looking for pips, right? I know you can't see it. I just tried to highlight it thinking you could. Allow me to see what I can do here because VIP, boom. So you can't convert this to pips. Look this up in a new tab as well. My computer's taking beating. Status of find profit and loss. Appearance tab of profit loss option. Cool. Next profit loss option. Charging out a file that's likely set to money. Change it to pips to view the performance of a trade in pips. Price range tool. You can also use the price range tool to see the price movement in terms of pips. Cool. So I'm looking for the appearance tab in Trading View. So from here, I need to go into Trading View. I believe that be the settings. I need to go to general appearance. Cool. I'm looking for profit, money, boom. I see ticks and I see percentage. What are pips? Hello, pre-market open. It is 8 o'clock a.m. Okay. I'm looking at a form that says ticks are more accurate than pips are. I'm also seeing where it says it is a matter of where the decimal place is. That is important information when it comes to the amount of money you have in a single trade. That decimal point matters more than anyone can imagine at the moment. We're going to try using ticks. Per what I'm able to see, hello flashbang. Uh, we're going to try and use ticks. So on appearance, specifically, I'm looking for bracket profit and loss. Actually, I don't think that worked. So this right here. We'll change both of these to ticks just to see what's going on. What do ticks do? This is where things get a little interesting for me because not entirely sure what to think of this. So far, we've gone only up. We're going to move this bar again. Why? Because this is our newest London high. Yes, it's pre-market open. Don't really care because we're waiting for within this price range right here for it to retrace, hit this again, or continue higher. Hit this again. That's our goal. If it retraces, it's going to be one large leg down, forming a new low. Once it forms that new low, that's going to be our continuation that, yes, price is going to move higher, right? Because we have a continued downtrend from this right here. However, and that would be our break of structure. This would have been considered a liquidity sweep. However, I'm also inclined to think that once it moves up, we're going to let it continue move past this, and we're waiting for the touchdown off of this. Once that's the case, that is our retrace. Once our retrace has been confirmed that yes, this is where we want it to go, we go higher, right? Because at that point, price will have settled into all the sell orders, and from that point, it will move higher. And again, there are no imbalances at the moment. I'm not seeing a single fair value gap in this, and we did clear this fair value gap, making it an inverse fair value gap. So, continuation, price is going to move much higher, much quicker. We're on the 30-minute for this one. Let's go to the 30-minute for this one. Boom. Poor baby. But he's been running a fever all day yesterday, and he is not feeling the brightest at the moment. I wouldn't feel the same if I had a fever either, buddy. It just doesn't feel good to have one. Hmm. Did that change? It did. Let's see how much it changed. I'm not seeing where it's changing the number. Are you? Comment section? I'm not seeing where it's changing. I need to text and train you. Okay, it's like setting. Cool. Find currency units. Hmm. That makes sense. That would create serious confusion if they were customizable. So it's set on time. I think I'm going to mess this up if I continue going any further. So what I'm going to do is I'm just going to get good. That's what I'm going to do. I'm going to swap this back to money because that's the easiest form of reading I can think of at the moment. And I'm on my verge of going to sleep. Like I am feeling myself drain of energy as time moves on. It doesn't feel very nice. So I think we're going to stick with what we've got. This entire side right here, this is monies. I think we're going to stop our stop loss right here under this low. And we'll stop it at, let's say 5,790. So we're going to go ahead and mark this now just to have it visible. We have our stop loss. Boom. We're going to go ahead and change this to red. This is our stop loss. Again, we're looking for a long position, so way up there. We have a high. This is our final high of London. This is the last time this white line is going to change on both markets. Both charts, not markets. Boom. What are we waiting for? We're waiting for key levels to get hit. I see a key level hit. What am I waiting for now? I'm waiting for it to come back down, touch the key level again. And it'll be within this time. It'll be from this line after that. It'll come back down, touch it, continue moving higher. And if it doesn't just touch it, it'll come down into this zone here. At that point, we know the FOMC is there. It'll probably dance around either this low, this key point, or this key point here. Once it does, That's our prime time to enter. It'll be on a long position too, because one, we have confluences saying that yes, price is going to move higher. That is our goal. Looking at this right here. Looks like we have a bit of S&T divergence right there. This right here is much lower on the S&P 500 compared to this one right here. So that is where I'm going to be looking at if that's the case. The smartest option at this point, because we have an S&T divergence, that is our confirmation that price is going to continue moving higher. Our goal is to ignore this low completely. I'm focused on this one because this is the only low that looks remotely the same on both charts, and I'm looking at the 30-minute on both. Our stop loss is going to be just below this, assuming our idea is correct that it comes up, touches this, and then continues higher. If it comes down, right, because it has hit key level, we're waiting for price to come down on retrace, waiting for it to do its gist, right, because at the moment we do have a fair value gap here. It'll come down, clear this fair value gap per the imbalance, retrace, finish this fair value gap. Our sign of continuation is an inverse fair value gap. So it'll have a complete lack down, stop, move higher. We have a fair value gap right here as well. This was what we thought was going to be the imbalance reversal to change this, right? Because we had a breaker block here. Filled that, continue moving higher as continuation. The fair value gap is our confirmation that yes, price is going to come back down, clear this, potentially come back into this fair value gap here, just to double down on it, creating that imbalance again. As a result, price at this point in time is going to move higher. What do I think is going to happen per the FOMC? I think it's going to dance in consolidation here for a second. What we're going to wait for is a break of structure back to the upside. Once it has broke of structure from this leg down and from this consolidation, it'll break out. Once we see that breakout, we'll press buy, move higher. And again, that's if we are consolidating among this right here, right? Per the FOMC, I'm expecting it to consolidate. I'm expecting it to dance. I'm expecting price to go all over the place when it hits a key level. We have hit a key level. We're waiting patiently until 9:30 comes, or actually 9:50. Did I mark that correctly? I did mark that correctly. Boom and boom. Yay. Which chart am I going to trade on? That's a very good question. Both right now are looking roughly the same. Not much S&T divergence. We have a leg down here, and it looks like it just shoots straight across here. So what I think is going to happen, I think the S&P 500 is lagging behind the NASDAQ, so we might take a trade on the S&P. We're looking for another S&T divergence confirmation, though, that in fact there is going to be that for confirmation on liquidity sweep for the upside, or actually from the downside, because we need the S&T in order to confirm that price is going to move in the opposite direction. Yeah, that being said, BRB. So far we are at 8:42 a.m. after market open. I'm looking at price continuing to move higher. This is our goal. This is what we want. If we were to do this right now the way it is, right, the way we're looking for, we need to scale down all the way to where we see a movement after this. We need to see a trade after this, right? What I'm looking at is one large leg up. We've cleared the previous high. What I'm looking for now is for the leg down. So price is at a discount. And we know for a fact from that discount, price is going to continue moving higher. Price will have hit key level within our time to trade. At that point, we're going to look specifically for key level, scale down, confirm where price is going to go off of that move. From that move down, take a buy entry, watch price soar higher. That is the goal. We've done pretty dang well at spotting pretty much every confluence we can off of this. Looks like we filled completely our breaker block because liquidity pushed past this right here. See if the NASDAQ is doing the same. We did. We actually cleared it on this high that we moved up to, which is working to our benefit. Both charts show price moving higher past our key level. So we're going to stick to what we have. Per the 1 hour, actually, because we have key level hit. What are we looking for at the moment? We have to scale down to the 5-minute time frame, wait for either a break of structure, an inverse fair value gap, or an S&T divergence. So let's go ahead and do that. Boom, boom. Come on. There you go. Boom. Because we're looking for price to go higher, what are we doing? We're looking for the leg down. We're looking for an S&T divergence. We're looking for a break of structure. We're looking for a fair value gap. Why? Because that is part, or an inverse fair value gap, I'm sorry. Why? Because those are our confirmations that price is going to continue moving higher. Makes sense to me. We're waiting for price to come back down. We are not within our time to trade yet. Just want to point that out there. We are not within our time to trade. All we witnessed was price hit this key level again after market open on both charts. We have an SMT divergence right here. Boom. And right here. Boom. Boom. There's our SMT divergence. NASDAQ says we want to go higher. I'm inclined to think price is going to continue going higher. Result, price is going up. S&P is lagging behind NASDAQ. So, per the NASDAQ, we're going to identify our blocks. And then from there, we're going to place a buy. We're going to get all the way down to the minute. We're going to confirm on the NASDAQ what's going to happen. We're going to wait for it to happen on the S&P. Once it happens, that's our entry. Boom. We're going to press buy on that. And yes, we are pressing buy because we're doing two things. We're killing two birds with one stone. The first is my ability to determine where price is going to go based off of previous data, as well as using our confluences before, during, and after market open. And then I said two birds. That sounds more like three to me. The third and final one is we're going to test the entrance on the market and then the partial exit on market. Because if my idea is right, we should be able to remove what we put into the market and watch our profit continue to build. Once it hits profit take number 2, we just take off that many pips or that much price, that much money, right? All the way up to that amount. And then from there, watch price continue to go higher. And we let it keep building and keep building and keep building until it hits a take profit we don't think it's going to go past. At which point, we'll have a firm, solid understanding that price at that point is going to be returning to us. And we're gold. We're not within our time, so I'm firmly expecting, per the FOMC folders, for it to dance along this line. I imagine it'll hit maybe two, maybe 3 more times. What I'm looking for is the rebound, the downtrend to hit this here. And we're going to see a lot of price action within this time right here. We're on the 5-minute for both. Both are looking about the same. We do have an S&T divergence on that. It's just a matter of waiting. This candle closes and we have a fair value gap. Per the confluences, boom, we have scaled down to the 5-minute. We are looking for a break of structure inverse fair value gap. We have identified an SMT divergence. From that SMT divergence, we can move on to fair value gap, right? Specifically. From that, we can also wait, because it actually makes the most sense the way I have said it a second ago, to use the GAN box from this low way down here, because it's the most recent low, all the way up to the most recent high. Boom, right? Waiting for price to come back down into this. And it'll be over here that it comes down that we're looking for. We're waiting for it to come down into this, and at that point, price will touch base with this again, right? We're just waiting for it to come back down. Once it comes back down, I think we're game for pressing buy and letting it fly. But again, I think it's best if we wait till 950. I'm not even going to bother looking at this chart. I'm going to wait patiently because we have our confluences built. We have them. Now, we're waiting patiently. Something I want to note, we've just hit our key point for a third time. This is before our time to trade comment section, right? I'm looking at it, and I know it's the FOMC folders that is doing this. Specifically one that is affecting the market at the current time. Okay? That is currently what I'm looking at. I expect price to continue to go lower. This is exactly what I was saying before would happen. We see a huge leg up. We're looking for a large leg down. And it's going to hit that liquidity level. Liquidity equilibrium level. I'm thinking, strongly guessing here. Price is going to continue moving down. And per the equilibrium, it'll probably hit within this here. It'll probably hit just below this. It'll clear this right here. Once it does, we're looking for the retrace back up. It'll hit this level here. We'll press buy, move higher. And if my idea is wrong, it'll dance around this for a minute, drop, continue higher. Because we are in an uptrend still. We have like this right here, minor retrace down. This is expected. It's supposed to go higher. Mini retrace, a little bit higher. Major retrace. This is the successful retrace we're looking for. This is the leg up that we're looking at. On the 30-minute, this is one big green streak all the way up. We see our red candles throughout this. This has created imbalance on the sell side. There are a lack of sell orders in this market. So now we have an opportunity here to watch as sell orders are being fulfilled, right? Price moves down. The imbalance in all of this green is corrected. It'll hit equilibrium right here. And on this same time frame, we're going to see a fair value gap form between all of this, right? Once that's taken care of, we have several fair value gaps identified. There is at that point a lot of imbalance in the market because now there's lack of buy orders. Why? Well, so about right here, and you could see it quite clearly. This right here, our leg down, was swept by this. It cleared it. It swept it. This imbalance was taken care of by this leg up. Plain and simple. Now we're working with this segment of leg up here. We had our order block here, caused our liquidity sweep, price took a hike higher. The imbalance and the sign of reversal right here was that price was going to continue moving higher. Same deal now that we're at the peak of this. We had a liquidity sweep. Where? Right here on this candle specifically, right? We had our order block. We had actually a breaker block here, right? And an order block that continued up, forced past this high, making a liquidity sweep, at which point price continued lower. We're going to wait for it to clear this breaker block. We're going to wait for it to break structure, right? Once it breaks structure on the 5-minute, which we've already identified several inverse fair value gaps throughout this move here, as well as an SMT divergence really close to it. We actually have an inverse fair value gap right there as well as a double confirmation of that reversal going down. We are now looking for signs of continuation, that price is going to continue moving back up. How do we identify that? Through a fair value gap, a breaker block, an order block, or an equilibrium. Well, we're clearing this breaker block now, making it invalid. So, what's our gist? We're looking for, specifically, the fair value gap off of this leg down. And it looks like we've actually got it right here. Boom, fair value gap. Although we can't really count that. Why? Because it starts inside of this pre-done fair value gap, making this invert, right? Making this completely obsolete. We don't need this fair value gap anymore. on the 5 minute. Now we have our inverse. Boom. We move down in chain. We're looking for now a fair value gap to occur. Fair value gap to occur on the upside. We'll have a gap. Breaker block, we're looking for a lack of buy orders, which we might be getting sometime soon because I'm looking at a lot of red and not many green. The breaker block will be a green candle going up, but it won't be a big candle. It'll be a small, looking like a doji candle, right? Shows imbalance in the market. Once that appears, we know that we can move on to our break of structure or inverse for value gap for the 1 minute. And per this trend down right here, because each one of these is 5 minutes, there are many retraces all throughout this saying that there is going to be an uptrend, right? And any one of those could be mistaken for, guess what? Breaker blocks or order blocks, right? What we're looking for on the larger time frame, because we have an inverse for value gap here, is a well-defined, and I do mean the best definition we can find of a fair value gap that is valid, a breaker block, or an order block, which is going to result in, guess what, a liquidity sweep, right? Once that liquidity sweep is found, guess what, we're looking at a return higher, which hopefully by the time I say so, by the time this looks, right, we might have an opportunity to press buy at this high here, at this key point, because guess what, we're waiting for the key point to get hit within this time frame, after this gray block here, right? That's what we're waiting on. That's what we're going to wait on. It's just a matter of waiting. And again, we have our equilibrium set to where right here. Price will come down into this. It'll probably close below this red candle here. Once it closes below that, we know that in one, we have a break of structure because we were in an uptrend. Now we are in a downtrend, creating a new low. And this is after an imbalance was settled. So per no imbalance, break of structure, official. Lower high form. Once that lower high forms, that is our confirmation break of structure. And it's going to continue moving down, right? We're using all the confluences at once on the 5 minute just to clarify, just to know what's going on. Once we see that we have a break of structure on the 5 minute, we're going to refigure, right? Because we're going to wind up back in the same spot either way, because at that point, we're just looking for continuation confluences. Either A, price is going to reverse and come back up per this sweep, right? Because it'll come down. It won't close below, but it will wick it. If it wicks below this, price will have been at a discount. We can press buy and assume it's going to go higher. And that is only after scaling down off of a break of structure. If we break structure on the 5 minute, as in we create a new low here, I'm willing to change my entire idea to say price is going to continue down, but the only way we can confirm that is through an inverse fair value gap. The only fair value gap I'm seeing is right there, and it's a very small one. And this one was not inverted as well, but it was swept by this liquidity here. The only imbalance I'm seeing is this right here. That very small fair value gap. Price might come down all the way to that, wick it, and then continue to move higher. At which point, we should be within our zone to take a trade. Yeah. I think I've spelt out pretty much what I intend to do. If I'm using these building blocks well enough, and you honestly enjoy this kind of content, be sure to drop a like, hit that subscribe button. It goes a long ways to telling me, hey, I need to make more content, because guess what? You're going to watch it. And you honestly have an opinion, and or you have an opinion and want to comment that. So go ahead and hit that subscribe button so you know when I upload. And from there, watch out for when I post. You'll be notified. Let's continue watching this chart. Fingers crossed we get a decent trade off of it. So check it out. We are not in our time to trade. I'm just pointing out something very interesting I thought you guys might like to see, like to know, something like that, right? In the time we have scaled down, we have looked for available confluences, and I believe we have spotted one. Guess what? Break of structure. What's our break of structure here? Well, first it was a lower low. Now it's a lower high, Break of structure confirmed? I think so. What are we looking for now? Because we have hit key level 1, 2, 3 times, 4 times technically on this leg up here. From this break of structure on the 5-minute, we need to move down to continuation confluences. What are those? Fair value gaps, breaker blocks, order blocks, and guess what? Equilibrium. We are in gold time, prime time, to see price come down into our lovely zone here. From this point all the way down, we're looking for one of 4 things to move on to the next. We're looking for a fair value gap. That's a large red candle going down that leaves a gap in the middle that tells us, hey, there's a fair value gap there. That is a continuation. That price is going to continue moving up. Does that make sense? Makes sense to me. From that point, we're moving down into our 1-minute confirmation, break of structure back to the upside. You get the point. It'll actually be an inverse fair value gap on the 1 minute. I think, will have a large fair value gap, right? Pardon me. It's 9:34. I haven't slept since 7 p.m. last night. But yeah, once it comes down into our little zone here, we're looking for essentially one of the 4 things. Fair value gap, breaker block, order block, equilibrium. Let's go and swap charts, see what's going on over here. We have not... Have we taken into order? Taken in... We technically have. It's the exact same chart. Like, literally the exact same chart. S&T is lagging behind. Well, interesting gist. Because we did get a break of structure. And we did form a lower high here. Price is coming down. I see 4 candles, 1 active, 1, 2, 3, 4, good. NASDAQ says lower, S&P says higher. We got the same break of structure almost at the exact same time. Yeah, break of structure was at the exact same time. Both are on confluence par. We're looking for 1 long wick down, and technically we do have a fair value gap right there, like a very small fair value gap on that, right? For that fair value gap, we'd be looking for the break of structure, which would be up in this, and for price to move higher. However, we want a larger confirmation. We want this price to get hit an umpteenth time, and we want it to be after this gray line here, which is our moment of trading opportunity. Once it's crossed, we'll be looking for those confluences again, reconfirm that price is in fact going to be moving higher. We're just waiting for that time to hit. Once it does, yay, we'll move on. Yay. This is where things get a little more interesting. How much more interesting? Just that little bit. Because we have our leg down, a big one. However, it's not a fair value gap. It's not. Plain and simple. Technically right now. Per this right here, we're in a downtrend. Actually, per this right here, because this is the high, right? This is our downtrend. We have officially broken structure. Per the next set of confluences on continuation, right? What are we looking for? Fair value gap, breaker block, order block, equilibrium. So we're looking for fair value gap in this. On the closure of this candle, we'll know fair value gap. Breaker blocks. Let's discuss those right quick. Breaker blocks show imbalances. They usually present as doji candles. Breaker blocks are the failed retracements. So they are the failed retracements in an uptrend, the down in an uptrend, or, again, very good at drawing these. They are the failed retracements in a downtrend. They are the failed legs down in an up and the failed legs up in a down. They show imbalances. For an uptrend, they show the lack of buy orders resting above the highs, most previous highs. They're showing, and that's not going to improve. I don't know why I did that. they're showing the lack of buy orders, right? As a result, market makers have to manipulate this high to, guess what, sweep on a high to force price to move lower. What about this right here? Well, it shows a lack of sell orders on the low, right? Shows a lack of them. So market manipulators have to, again, utilize what sell orders are here to fill their buy orders to sweep. Actually, I guess I drew that kind of wrong, because the continuation would be like this, and for this to be valid, it'd be this right here, right? So it would be, did I do that right? I think I did that right. It would make sense if I did that right. I got the definition right. I know that much. It shows the imbalance of orders. And as a result, I'm looking for a large candle to move in the opposite direction. Because, again, breaker blocks are signs of continuation on the 5-minute. That price is going to continue in the direction we think, which is supposed to be up. From this point, it's a matter of identifying what that breaker block looks like. I said before it looks something like a doji candle. I could be very well wrong on that. I'm new and I'm still learning. That's the whole point of me taking a trade today, even with FOMC on the news board that we're not supposed to be taking a trade, right? This is the experimental side of things. I'm experimenting with what is and what isn't. I know FOMC with a red folder is a definite, without question. Don't even think about it, because that is just going to fail all the way around. However, the folder is yellow. It's a normal color for the folder. So my thought process is, it's not a severe change. It's not going to be a drastic change. It is going to be something a bit more interesting, though. We are 6 minutes away from our trade time, and per this, right, per this mode right here, we do not have a valid trade option just yet. We are waiting for the breaker block to form, which this actually looks like. If it completes, right, it'll be the failed retracement, and then boom. We haven't swept liquidity on the upside, so there, aside from like this right here, and this would be our breaker block in this, right? And then of course our order block, leg back up, that caused the liquidity sweep. Boom, price will continue to move down for a short time. What are we looking for on the now downtrend? Because we did break structure to the downside, right? What are we looking for? We're looking for a liquidity sweep. That usually happens right after a order block. We're also looking for fair value gaps along the way down. This shows imbalances in the market, lack of buy orders, and so market manipulators are going to have to use the resting sell orders to fill their buy orders and push price in the opposite direction. Right now, price is in an uptrend. We have not made a new low. This is our most current, most recent, lowest low point, right? Until it reaches below this line, I'm inclined to think price is going to continue moving higher. We have hit our level of price 4 times in the past couple hours, 3 hours, 4 hours, something like this, right? We have hit that price level 4 times, creating new highs as we see fit. So now we are looking simply for that break of structure. We're looking for that confirmation on the 5-minute that price is going to continue moving higher. That is our only goal at the moment we are waiting on. We are not within our time to trade. I want to point that out. I want to mention it. I want to make sure we're gold on that. We are not within our time to trade. And NASDAQ is telling the future of S&P. We are 1,000% going to be taking a trade. I'm sorry. Do I have that backwards? I have that backwards. S&P is forecasting what NASDAQ is about to do. NASDAQ, I believe, actually gave us a confirmed breaker block here, because this was a failed retracement. That is price moving everywhere and nowhere at the same time. This shows an imbalance to me. This candle right here shows the imbalance that, yes, there is an imbalance of lack of buy orders. And as a result, we're going to see one large wick down. We're just going to see a candle move all the way down, kind of like what we're seeing right here. Huge candle down. As a result, we're going to see a huge candle back up. We're going to hit this price level again, and it'll be, it might actually just be on the gray line that we hit it, to tell you the truth. From that candle up, we should be actually seeing a couple fair value gaps. We're actually, for prime time entry, per the notes, right? As soon as we identify the fair value gap, we can move on to the 1 minute time frame and just look for an inverse fair value gap. On the 1 minute, it'd be a break of structure first because, again, there are a bunch of ups and downs within this 5 minute candle that we could take advantage of. Once we've identified the break of structure, it's just a matter of scaling like nowhere, stay where we are, understand where the fair value gap is, and starts on the 5 minutes. So that way, when it closes above it officially, we can go ahead and press buy, enter a long position, and watch it soar higher. That is the goal. With that being said, we're going to wait 5, 10, 15 more minutes before looking at this chart another time. We're just going to let it sit, do its thing. We're going to sit on our hands. We're going to wait. Again, we're taking this trade on the NASDAQ, it seems, because it is lagging so far behind the S&P 500. With that being said, just so we're on the same page, remember what I was saying about equilibrium getting hit? I think it was just hit. We are looking at equilibrium right now. It cleared the fair value gap, and I'm pretty sure it's going to show it on this as well. I'm going to go ahead and do this right quick. Boom. Liquidity swept all the way down there. It cleared this imbalance. What we called a breaker block, right? And then our order block, or actually the order block liquidity sweep from there. Push up, right? It pushed up. This cleared this. Now we're looking at a huge spike up. Huge spike. We have 2 minutes, 44 seconds for this candle to close, for our trade time to become available. We're waiting on it. Per this, we are in a downtrend. What are we looking for? We're looking for a fair value gap, a breaker block, which this looks to me like a breaker block on, it's not even present there. This, to me, looks like a breaker block on the NASDAQ, and the NASDAQ at the moment is telling the future of the S&P. We might be viewing ourselves an order block, right? From that order block, we can scale down. All we're looking for at the moment is a break of structure to the upside, or, again, a fair value gap. Just to point it out. There's our low. This is within equilibrium. This is actually hitting equilibrium, if I'm not mistaken. Let's go ahead and take out our GAN box. From here all the way up to there. Yeah, that hit equilibrium. That hit that. So now we're looking for price to dip below this. And then once it dips below that, we should have a relative size fair value gap, right? Just a relative one. Nothing big. I think we got a breaker block there. Nice and fine. From that, we're just going to keep going down. Wait for it to hit this. Once that's a thing. I believe we are looking for a break of structure at that point on the 1 minute specifically. We're going to do the same thing for the S&P. Because right now, looking at a small amount of S&T divergence, just a small amount, but at the same time, I am firmly confident, firmly grasping the fact price is going to continue moving down. We have a bit of S&T happening, which is kind of concerning. Just a little bit. Anyway, we're looking at both charts with intent to kill. We're waiting on it. It's asking us to trade. Why do I get the feeling my trade idea is going to be wrong? Because I'm looking at a huge leg down, and every confluence says it's going up, but the FOMC just loves messing with me, man. It really, really does. I don't have confidence in this trade, though every confluence is pointing at the fact price is going to continue moving higher. And this is just the retrace down that we were looking for. This is what we were looking for, comment section, for that leg down. But there is no fair value gap in this leg down. There is no imbalance. With the exception of, on the NASDAQ, the one green star of hope that we're looking at. right? Per this, I don't know why I was holding my hand up that long. That one green block, that huge line, screams to me, breaker block. It screams it. We are now in trading time. We are clearing all of this. If I had to guess, I'm going to say it is actually going to clear this lovely fair value gap we've got going on right here on the 30-minute. We do have a fair value gap happening right there. I don't believe it's going to go any lower. I don't believe it's going to go any lower. If it does, yikes, because we are now well within discount. And again, we have not seen a fair value gap. What else are we looking for in fair value gap? We're looking for equilibrium. We're looking for breaker block or order block. I'm not seeing a breaker block with the exception of on NASDAQ. And right now the S&P is lagging so far behind, it's actually tanking. All the way down to there. It cleared that fair value gap I was mentioning before. It went all the way to the fair value gap on the S&P. So the NASDAQ at this point is the one lagging behind, I think. Because it has yet to reach all the way down there. And this would have been the fair value gap on the NASDAQ we're looking at. So I think price, we are about to look for a fair value, or not fair value gap, we're looking for a break of structure. I want to see a fair value gap form. We haven't seen a fair value gap in this, so we're not going to count it as a fair value gap. Instead, we're going to wait for, guess what? The leg up. This leg up is going to create a fair value gap, and on it, we're going to press buy. As our sign of continuation. From that, we'll move down to break of structure or inverse fair value gap, which we should see on the leg down. Either we get a break of structure above this, in which case we can press buy, or we get an inverse fair value gap, which means it'll come up but not break structure. It'll go back down, clear that inverse fair value gap. We press buy and watch it soar higher. And again, we're waiting for it to form on the NASDAQ. So when we swap to the S&P, we can go ahead and have that optimal trade going for us. We're getting there, comment section. We're getting there. Slowly. We are meeting goals. We are running this. We are here. We out here. I'm going to wait 5 minutes. That's one candle. That's into the third candle. I am looking for a fair value gap. And if it doesn't give it to me, I'm treating this as a breaker block. At which point, it's a break of structure that I'm after. I'm going down to the 1 minute and see what's happening here. Because this is one large leap down. Technically, that's our fair value gap there. If so, at this point, we would be moving into our confluence of, hey, there's a fair value gap on the 5 minute, move down here, wait for break of structure, which would be a higher high. That works. Either that or an inverse fair value gap, which we did get off the bat. We could technically press buy here, but I'm not confident in it, so I'm going to wait for the break of structure first. I'm going to press buy up here. I'm going to place my stop loss down low, and we're going to get it right this time. Our stop loss is going to be that low. We're going to modify it to make sure that's the case, and then we're going to put our take profits much, 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 much higher. Again, we're looking at it form on the NASDAQ, so when we hop over to the S&P, we have the same chart happening. What's a break of structure? A new high, which means it's got to close above this wick. That's what we're waiting on. That's all we're after. Give it to me. Give it to me. Come on. And again, I'm open to the idea of it being wrong because right now, per our trading strategy, after this mark, it has not hit a key level. It's been danced around through this, but it has not hit this key level yet. And this is our goal. Break of structure is when the candle closes above that, so we are going to wait patiently. We got 5 seconds. It's got to close above it. It can't be a wick. Look at that official break of structure. That says a break of structure. We're going to press buy now. Oh, wait. We have to press buy on this. Yep. Buy. We're going to buy onto that. Yes. We're going to buy here. We're going to take our stop loss. We're going to zoom way flip out. We're going to put a stop loss way down here. Boom. Modify. Take profit. We're going to go way... Hang on. Oh, dog. Oh, diggity dog. I don't think it's going to happen, but for YOLO's sake, let's bring it up to our second take profit level way up here. Boom. Modify. Stop loss is set. Take profit is set. This is A. Let's go on and bring... Is this the correct one? This is a long position. Yes. From here. Oh. Hang on. I messed up. No. X out of that. Cancel that. We're after this right here specifically. Boom. 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 This is a risking of 1 to 4. This is a fine trade to have. This is a very good trade to have. Risk to reward is where we want it to be. We have the potential of making 4 times what we did in the past. This is under the same confluences we were using in the past videos. This is understanding what the market is doing as we see the FOMC unfold. I think this is going to be a valid trade. We have our modifier set too. So if price decides to move back down and stop us out, okay. That's not a problem. What I'm looking for specifically from this trade is at least this right here to get hit. Because we know off of the break of structure on the 1 minute that price is going to continue moving higher. And as a result, we're going to have that move high. We want to see it move higher. Comment section. We want to. That's the hope. Let's go ahead and pull this up. We took the trade on the S&P. What we're going to do here, can I watch the NASDAQ while that's on? Please tell me that's still moving. Because that would suck if it's not. 1 long quantity. Good. Orders. Did I see 2? Oh, these are working statuses. Okay. It's working because guess what? We haven't hit either or yet, so we're waiting on that patiently. Yeah. Just a matter of waiting. That's all it is. We have our stop loss set. I think we're in the gold. We're in the clear here. And again, I'm sticking with what I said earlier, that I do believe we are going to have a loss on this trade. I think we're going to lose on the long position. I think we are. Why do I think we are? Realistically speaking, it's because our key level wasn't hit during the trade time. We didn't wait for that key level to get hit during trade time. We waited to get hit on the hourly on pre-market. From that, we built our building blocks all the way down, and we were watching market like a hawk. Every single step of the way, we made sure that the building blocks were there, with a few iffy moves, right? We did get a fair value gap. We got an inverse fair value gap on the 1 minute. We took a trade off the inverse fair value gap as well as a break of structure because we did get a closure above this right here. Now we wait. Oh, so patiently. What's going through my head right now? Am I stressed? No, I'm just hot. I've had a PC running for the past hour, 2 hours, actually longer, because I've been pausing frequently throughout the recording, right? I have had this PC running since 7 a.m. So 3 hours and 11 minutes ish, right? It's hot in this room. I could open up the window, but man, would that invite all kinds of noise and chaos. And I know you've already heard the baby screaming. The baby has been active all morning long. So, yeah. I believe on the 1 minute we just witnessed an order block. That leg up right there, you see? Because we broke structure and was enough to fill the buy orders. So now we're looking at a liquidity sweep on this leg right here down, right? It'll sweep liquidity, maybe close below it. That's okay. It'll sweep it though, and as a result, move higher. I'll go ahead and delete this because I can. We know where our take profit is way up there. We know where our stop loss is right here. We're looking specifically for it to go higher. And let me make something absolutely clear. Let's go ahead and do this because we wanted to modify it earlier and we weren't able to. I want to take this and bring it down here. This gives us room for error. This allows us to have the gap where we want it, right? I've already messed up. Remember earlier in the video when I said, hey, because we have this level here, let's go ahead and call it right about yada, 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 right? I think that was the mistake I made. That's me. That was on the hourly, if I'm not mistaken, as well. We identified where we wanted our stop loss to be before we ever got to actually putting the building blocks on. Instead, we just went off the building blocks from the daily down to the hourly to determine where we were actually going to put our stop loss. Well, something I also want to mention. I'm looking at this number right here. This one right here, right? It says negative $300 because price is going down and not in our direction, all right? Something interesting. The number either matches the stop loss and we get stopped out, or and I think that's the only thing, that's the only it about it, right? I think that number has to match the stop loss for it to legitimately stop us out. That would make the most sense to me. Yeah, I just gotta watch that one number and that's pretty much it. Is the psychology here? Why am I forcing myself to watch this number? It tells me whether or not the idea was right, the trade idea. Either it was right or it was wrong. I'm okay if it's wrong. I went into this trade knowing I'd more than likely lose. Why? Because it's a double FOMC day. It is two of those folders. And let's actually recheck news because we didn't do that. Okay. We have FOMC. It's actually working now. 8:40. FOMC member Kugler speaks. That's done. Let's go ahead and refresh this just to keep it nice and fresh, right? We're all the way past 10. All of the news for USD has affected market. It's done, it's past, it's over, right? We're now waiting for it to go much higher, right? As a result, we're looking at Euro, JPY, and AUD. None of those affect the market we're currently in, so guess what? I don't care about news. I don't care about this page. Bye-bye, Felicia. We are now looking at market. I think if we lose, the key point I'm taking from this is that FOMC is a precursor to a reversal in the market, similar to that of reversals, in the sense that FOMCs essentially say market makers are going to manipulate the market to force it in the opposite direction. It's not to be used as a tool, as an indicator, kind of like reversals are, but it is and can be used as a precursor method to identifying what market is going to do throughout its gist. Frankly, that is a possibility. Again, we have not seen what PPI, CPI, or NFP does to the market. At least not yet. We're waiting on that. Just so we're on the same page, too, I do believe that we have a way of partially exiting, and that is going to be determined assuming we hit our first take profit, which is going to be that first white line at the very top. We're not going to miss that this time. We are 100% going to be taking that take profit all the way home. We are not missing out on it at all. At all. Not gonna miss it. Not this time. We got this. Because remember, last time it danced. It danced all the way around where it was at in the market for a minute. And it finally hit where we wanted it to go. And then it reversed on us. We want to get our money back out. We want to protect our position and let the money speak for itself. Let it go higher as the trade is correct. Back out when we're satisfied on the amount we have for the day. That is our move. Looking for stuff to fidget with now, because I'm kind of bored just waiting. I know my psychology needs to be where I am. It's an escape mechanism of my own. It's the human anatomy going, hey, you're kind of stressed right now because you want this idea to be right, but you know it's going to be wrong. And it's kind of one of those, the psychology game is there. I'm fighting myself at the moment internally as to where price is going to go. I'm like, man, it would be awesome if it succeeded. Man, it would suck if it didn't. I know the risk and the to reward ratio is where I want it to be. It's a 1-to-4. It's not bad. In my opinion, it's not bad. I know what I'm risking. I know what I could lose from it. The goal is there. It's in hindsight. It's just a matter of getting to it and retrieving it. And I could very well lose it. Another, I believe that is $900. That's $1,000 drop if I were to lose it all. It's a good thing we turned this, like, I'm happy in myself that I managed to come this far to identify all the building blocks. It's just now experimenting with news, learning news firsthand rather than having a video explain to me, oh, you don't want to do this because guess what? It could do this. I want to see it. I want to learn it. I want to know it, get my hands dirty on it. So that way, the next time I see it, it's a done deal, confirmed just that, hey, I know what's going to happen because guess what? I've done it before and I'm not going to do it again. Get all of the complicated convex crap out of the way so everything after is sublime and simple. I know that's a weird way of putting it, but you get the point. Go ahead and zoom in to the chaos. Allow ourselves to see what is happening. Because I know that's very hard to see. We're actually going to put this way over here so it's not in the way. There we go. I think next video is going to be a combination of me learning how to think with these books, right? Because I got some books for D&D, and it's a little bit more intensive work. It's not going to be short work, quick work. It's going to be long, arduous, very long thought out process. I kind of want to build a world around a D&D session. I want to like build it from the ground up completely. I want to make an entire planet of continents with their own little gists and everything, and I want to get so good at making those. So good at making them. It's just a matter of putting it together, getting a group of players, identifying problems, and growing as a group throughout that story. I want to do it. I want to do that so badly. I might do that for a stream. I might do that for Wednesday's stream. Stay tuned for that. Check out Orb's Vault on YouTube. I'm tempted to say screw and just throw links all in the description because right now we have links all over it. And there is one that leads to the Twitch. That leads you to one of the channels I live stream to. The other is YouTube, Orb's Vault. Check out the Twitch in the description. We typically play games there, but I am very tempted to change up content just to mess with the algorithm and see if I can reach out to a much more broader audience, right? I'm attempting. I'm curious to see what I could do with D&D. Curious. I've done a mock session of it, and it was stressful because I'm more of a narrative person. I like telling story. I don't like acting story, right? Yeah. I feel like I need to learn how to act and play a story versus tell a story. I've grown so accustomed to video games, it's honestly amazing how little I know about that game when most of what I play is based around it. It's just mind boggling. So used to being the player going after stuff. Shoot, Warframe. If you watch any of the live streams, any of the videos I post on Orbs Vault from the live streams, you'll understand that I am a Warframe fanatic and a Halo fanatic at that. I play both those games more than every other game in the library put together. And that speaks volumes because I play very, very little Halo now. It's like, oh, I did one live stream of it in the past week, and I am kind of perturbed in myself because I want to make more Halo content. I feel like if I had a big enough friend group, if I even had 4 people to play with me consistently on Halo Infinite, we can make some serious maps. Shoot, I started making a map on stream. If you guys went to go and see, you'd have seen it. And in that video, I even, like, towards the end of me building it and unpausing the recording, because, let's be honest, it was the boring bit, not gonna lie, we made a map, a big map, and my hope was that if we were good enough at making it, and it was just like Halo Reach the way I had it before, where I just made a little square of my own little space, and then I made an arena built around many different players and many different game modes, right? It would work functionally really, really well, right? Except this map is going to be 100 times bigger because Halo Infinite is magical in that sense, right? And we could honestly take from that and just pour in as much as possible. I just have to learn Halo Infinite's Forge and honestly everything about it to really nail down what makes Halo Infinite the better, the new and improved over the old and sought after. Make it so good people want more, not so much so good that it becomes unrecognizable. I think that's the biggest lesson I've learned from Halo in a while. Just, I need to figure out how to make people want more through, honestly, what I make. Wish I could turn on my fan right now, but as soon as I do, I know you guys are going to hear it, and it's going to be so annoying. It's going to be super, super annoying just to hear that fan go off. I know you're not going to want to hear it. So I'm going to suffer a little bit in silence. I'm going to wait for stuff to happen. Gold to get hit. Call it a day. We're going to go ahead and do this right here just so we can see a little clearer. Get a little roadmap going. When we hit our first take profit, I'm looking at 1 unit plus 200, or actually, because this is $5,829.75. This is $5,818.75. We now have to subtract that math. So let me get my phone and do the calculator on it. So I am ahead of the game in the event that does hit take profit. 582975, 582, no, not 3, 29.75 gold. Subtract 5818.75 gold. Does that make sense? Does it make sense? Kind of not really, because that leaves me with $11. That does not make any sense to me. Interesting, to say the least. Very, very moment. I know I bought in at 5,818.75, so that's what I'm gonna do. I'm gonna sell not a unit, but the price amount. I think I should be able to I think that's what I'll do. Is this right here? I think that's a bad decision. I think it is. Could be mistaken, but I think that's the bad move to play. I think. I don't know. We'll see. Hmm. Is this the correct thing to do right here? If I sell at this price, I get everything I earned, and then I'm watching it go higher. Is that correct in saying that? Am I correct in saying that? So this is the correct option to do. Did I do this incorrectly? It wasn't supposed to cancel. It was supposed to be a additive thing. What the heck? Comment section. What? So I'm looking at Google. I learned this after placing a buy order. So we've already bought into the market, right? Setting a sell order at a specific price, X amount, will create a sell limit order, meaning you're instructing the platform to sell your position if the price reaches or exceeds your specific sell price. As a partial exit, okay, purpose of sell order. So my understanding is for this to work out the way I want it to, it'd be. Oh, this is such a bad idea. Experiment time, because we've made back some money. Let's go ahead and do this. We're going to do the same thing again. Take profit way the flip over there. Actually, I can't see that, so we're going to do this. We're going to get this completely out the way first. We're going to take this, do this, boom, boom. This is such a bad idea. Don't ever do this. I'm not doing this. I'm not doing this right now. Watch, ready? Yeet. I'm modifying this still. Boom, yay, gold. That works. What I was trying to do was partially exit chat comment section, right? I was trying to partially exit, which means I'm canceling this right here because guess what? We don't need it. We're looking at the potential for it to go higher. That's what our goal is for it to go higher, and it did just that. It did just that. It hit our first take profit. So the limit order, if I place it as it hits, will execute and straight up rip me out of the market. It's not a partial close like I was wanting. So to partially close, I would have to legitimately go in here as this is doing its thing, because see, we bought in here. We bought in again. This is such a bad idea I have. Such a bad one. But to do this, we would need to close the stop loss here, right? We'd cancel, boom, and it would just straight up fill all the way up, right? From there, the stop loss is no longer a thing because guess what? The price is going to go higher. There's nothing stopping us from losing more, right? Because it hit our take profit. My idea of partial exit was take the money you invested back out so that way, one, you're seeing the progress made on the chart, right? And everything that you could have lost is now not only protected, but in your pocket. So guess what? You're not losing anything. You're watching price go higher. Explain to me what I'm after here, because I am genuinely kind of confused. Kinda. Everything around me, everything I've gone to says, hey, when you're good with this, go ahead and press the big X to the right. At that point, it's a matter of, or even on this right here, you could press X here, or I guess press X down here to cancel this. At that point, it's just a matter, because the trade idea was right. We hit take profit, right? Now we have a slight problem. And this is where things get a little dicey, because this is what happened last time. We hit a take profit, but price chose to reverse and continue in a downtrend. And technically right now we are still in a, guess what, downtrend. So I think let's just see what this does, because experiment time. Boom, cancel that, yay. We have no stop loss now. We can lose an infinite amount of money, doesn't matter, because guess what? If the trade idea is going to continue to be right, we still have a take profit to set. This is where things get interesting, right? Because now I am in the market still. I have a take profit set. My goal is to get more money. That is the goal, right? Comment section, right? Okay. From here, I guess this is how I would modify it. I could take that take profit and move it to half. It's about right there. Or that would be the way to go, is move stop loss higher, so that way, 1, it's going there. 2, as take profit moves, move stop loss again. Just move it incremental steps. Just keep going higher with it. It'd be the best bet, in my opinion. And I can modify the stop loss right there. Just check that box, and then from there, modify it from that. Okay, so I'm learning. I am learning, and because I'm looking at the USD, right? I'm looking at this particular. This is where we entered. This is the take profit, right? This is not where we entered. This is take profit specifically. From where we entered, I can mark down the amount of monies I don't want to lose, right? I think it's best to say we do not want to lose $500 off of this purchase. We bought back into it. We don't want to lose more than 500. So, with that entered, boom, 500. Hey, I figured stuff out, chat. I figured it out. I learned, I did stuff. And it actually did what I wanted it to do. I now know how to modify this to where I want it to be. Gold. What am I looking for specifically? And we might actually get stopped out, because guess what? It's moving back down like I just said it would, because this is exactly what happened last time. Comment section. It's happening again. I am fine if we lose this trade, because we entered in again, and that was stupid of me. I cannot believe I just did that. I really can't. I hate the fact that you can't modify this right here, because this right here is your entrance, right? And I was kind of wanting to be able to manipulate that right there, so that way, no matter where price went, this followed the green line, right? So in the end, when you partially exit, partially close this market, you're actually moving this higher, right? So in reality, you're not losing any money, because your stop loss will have the same margin, right? But your entrance level will change with the price, so that way when you exit with your stop loss, not only is this going to continue in its direction, but you can set a new stop loss after. So guess what? You're where you want to be. You are where you need to be in order to successfully execute take profits based on where the price is, and so you can further manipulate how to get out of the market. I get that might come with later iterations, like actually going into the market, or not in the market, but the app itself for TradingView, and actually getting memberships and stuff and yada yada to get it honed in. But you get the point. I was thinking there's a little bit more freedom with this. I guess I'm not, because it operates off of this and not this, right? Yeah. Looks like the trade idea was correct, though. For the most part, we are moving higher. How much higher? I don't know. I'm tempted to say take a profit there. Ooh, hello. What the heck just happened? Oh wait, that's marking where we sold on the that's marking this right here where we canceled it by mistake. That's what's happening there. We went higher. We're moving higher. We're getting there slowly. We're just waiting for the profit. Waiting for the monies. We're just waiting for the monies. Yeah. Assuming we're green on this trade, we'll be up. I forget, how high were we up beforehand? I'm gonna have to look at my videos this weekend, or actually today, because I go in to edit today for all of Wednesday, Thursday, and Friday. So you have plenty of videos coming out. You have shorter form content on this channel coming out, and shorter form content going out to Orb, the gaming Orb, right? As well as a video that's going to be uploaded Wednesday night and a video uploaded Thursday morning. That schedule is weird to me, but I have my assembly working, and it's how it's meant to be at the moment. So I'm getting there. I'm doing stuff with it, right? So pipe down, comment section. I'm working on it. Yeah, be sure to check out those videos. They'll be posted in due time. They're all scheduled out. I've actually got a couple scheduled out already for Wednesday. But I'll be making videos to go in line with those for Thursday, Friday. And then on Thursday, I'll be making more videos for, guess what? Monday, Tuesday, Wednesday, so on and so forth. I'll be like 3 days ahead. I am slowly learning how to edit my own videos. I have done a lot in the editing space. The a lot part is an exaggeration because I know I could do more if I had the time to. And I had the experience to, because that experience in turn translates to product over wasted time. So, with that being the case, I think my current pace of chop up long video, get the best parts in it, and then post along with an outro it works right now, right? With that being the case, I'm taking all of that and applying it to new things, like adding text over stuff, subtitles if you want, adding subtitles, adding text, or putting in an image when someone says something that's funny and reference and do animations and stuff. I'm slowly getting there. Each of these videos I put up, I attempt to edit on Tuesdays and Thursdays. Those are my editing days. And every single time I post a video, I am legitimately going back through that video in my head as I'm editing it 5 times over, trying to find out the best points, what I could do and where, if music is needed or necessary at certain parts. And honestly, I honestly like the music aspect of things. Like, I'd love to have more music in my videos just as an overall tone setter, because I understand how important music is to editing those videos. It's just getting to it to actually put it in there and have it make sense, because YouTube library kind of sucks with some of their selections. Not gonna lie, just a little suckish, YouTube, just a little bit. Some of your stuff is good. I use one of yours, the NFX, the track at the very end of my videos. If you watch, you should be watching all the way to the end of my videos to hear that track. That track to me is ear appealing. I love the sound of that track, and it fits with the theme of my channel. So, recommend some music. Preferably from Music Library, because I'm a cheapskate and I honestly don't want to look up other sites, sketchy sites, to download tracks from and then post into a video. And of course, for the unlimited license to use, right? Like, the credits already put in the description when I use NFX. I kind of want that kind of thing to happen constantly, so I'm not having to worry about, oh, this creator all of a sudden decided you needed a license. Now your mini video is no longer available on YouTube. Sucks for you. We're going to copyright your channel into oblivion. Goodbye, channel. Comment below some music ideas, some tracks, some sound effects, some everything. Because I've legit like hyper compartmentalized each of the folders for the different types of music I have on my desktop, to where I can just drag, drop, I have a track, manipulate the volume, call it a day. And that's also something I'm going to be working on, is volume editing. Right? Because I understand I am loud in some cases, and other times I am freaking whispering. You can't hear me. I'm quiet. Nah. There are reasons for everything I do in my videos. Comment below what you think I could do that is not beginner level, not super intermediate, but the in-between of on the verge of understanding how to edit audio and visual aspects of a video. And to a beginner who's getting into the space of, okay, I think I'm comfortable with cutting down some videos, but I'm taking that step, that extra step to really put flavor into these videos. So I'm not breaking myself on it, right? We're going to manipulate the stop loss to up here now because I'm feeling a little more comfortable. Stop loss has been moved. Good. Good, good, good. This is where I want to be. Yes, yes. This is how I want to be. We have an unrealized profit of $162, chat. This trade idea was gold, and we did good. I think we did good. I can say, woo, we're still in the trade. Off of a bad decision of re-entering the trade. Bad orb. Bad orb. Let's see how well it pays out, though. We moved it from 500 to negative 262.50. In the event we do lose what remainder of the trade we have left. We are in a strong uptrend as per all of the indications that price is going to move higher. And sure enough, that's what it's doing. It's actually moving much, much, much higher, which is something we really wanted to see. This is something we really wanted to see happen. I'm glad this paid off, kinda. We're still in there. It hasn't paid. We're getting there, slowly. Yeah. I'm going to call this a successful trading video. Even though we're not out of the trade yet, I'm going to call it successful because we did the job. Go me. Woo. I say we did the job. I did all the work. You just sat there watching. And you chose to wait till now to hit that like button. You chose to wait till now to hit that subscribe button. How dare you wait till this point in the video? Let me make something clear. I appreciate you guys so much for watching. How dare you forget to press those dang the buttons on the video? Like, come on. I'm doing this every day and you guys can't press one button. I'm pressing hundreds of them. Come on now. You can do a little more. Just a quick tap of a button is all. You made it this far. Hit that subscribe button. Hit the like button. I post every day on this channel. Literally. Sometimes twice a day. I know it can get confusing with the long videos and then the shorter ones that are repeats of the older stuff. I know it's confusing. You can sift through it. There's such things as playlists. I need to actually go into my... because we haven't done a legitimate playlist feature on the channel yet. So it's kind of blank. You can't see what's happening. Aside from if you go to those playlists. I'm working on that. As soon as I have it ready to go, you'll see exactly what's happening. You'll see it. Promise. You will see it. I see on the verge of $200. So what I'm going to do is I'm going to move this up to $200. Boom. Every little bit that moves up, we're moving our stop loss up. Just a little bit. We're moving it up just a tiny bit. We're going to grab all of the take profit we can off of this trade. So at the end of the day, we have a positive come back to us. And it's a 4-to-1 trade. 4.62, I think, is what it was to one trade. Those odds are fire, in my opinion. And right now, it seems to be paying off. Right now, it does. I think we're good. I think we're really good. We went from a negative $700 deficit
on the realized profit and loss. We made back $600 today, comment section. Off a trade we knew and we honestly thought we were going to lose. I'm proud of myself for making that back. Shows me the progress I've made. That works for me in my favor. That is gold. We got a mini retrace. That's completely fine. Completely normal. We have our stop loss. So even if we do lose, no harm, no foul. All good. We made a profit. And we didn't lose more than what we gained. That's what we're after. Now it's just a waiting game. Also, comment down below. Would you like me to do D&D stuff on this channel? I know it's a game. It's a tabletop game, right? I know it's a game. My question is still valid, though. Because it is a game worth going into and building. We wouldn't actually be playing the game on this. We'd actually be creating the story of it, right? So story writing, storytelling, building each of the characters, and putting them behind mystery and foreshadowing, right? We'd put it all there. So one, we have something unique that all the other channels don't have, is a storytelling environment, and we have a learning aspect to things because I'm still new to D&D and I would like to create a world before I become the player, because there are aspects to D&D that the players can abuse, and there are also aspects to D&D that the GM/DM can abuse, and they can conflict if you're not fluent with all the rules of the game before you start creating that world. So, genuine opinion, not for those who are sticklers about, you should be a player first. Why not be a player first, man? You're gonna create such a bad world and embarrass yourself in front of all your friends. I've already done that. I've already embarrassed myself. I thought I was a good DM. I wasn't. And as a result, kind of messed myself up, not gonna lie. But it was a learning experience nonetheless. I am comfortable with telling a story, and I'm comfortable with building a world that no one else thought of. No one else has thought of. I'm very curious as to what I could do in that space. Just something I'm throwing out there. Comment. Do you want a D&D video where I'm just building a world? Like, I will create this video, right? And then, I guess because I have my spare time, if you want beforehand, I can create the D&D video, have it uploading. It'll upload. And then these videos specifically, will be uploaded to the same channel, this channel, Orb Plus, not Orbs Plus, Orb Plus. Hi. It'll be uploaded to this channel the same day, and from there, we can just continue. If you want, drop a like while you're at it, because you know you like this video. We've recovered. We have gone from negative $700 to $25 in profit. Ish. We're still looking at unrealized profit. We're on a retrace back down, and it could go back up the way we're wanting to. So, just a thought. I think to minimize loss, we're going to move this up $100. This is probably a bad idea because we could easily get stopped out at this point. Modify. Boom. We could easily get stopped out, but that's okay. We have rescued the $100 mark. We have not only taken profit, but we've recovered and protected our account size. We're doing very well. I think we're doing good on the psychology stuff. I'm not super stressed. I know it's fake money. I know I should be stressed because, hey, this is real money that we could be making versus this fake money crap. I don't want to fake money anymore. I don't want to win fake money. I want to win real money. This is where the psychology comes in. I'm patient enough to know, hey, this could have turned out horribly. I could have lost another $1,000. It was 1,000 times 4 win to loss. It was 1-4. That is huge. That's the largest risk to reward ratio I've used since I've started looking at the chart to actually trade on. The largest one by far. So, with that being said, patience. Patience is being used now. More than it has in the past. It's being used. We're watching this unfold minute by minute too. We're doing really nice. Holy crap, look at that spike. We went from what, 100 to 100 to $225 right there. Crazy. I don't want to move the stop loss though. I want to keep it right where it is. Not until we hit 400 on that green number. We either hit 400 or we're keeping that price right where it is on the stop loss. Because I'm not losing more than $100 on this trade. I'm actually tempted to say I'm not losing any money on this trade because honestly, if it moves past $400, at that point, we've actually made $100, $200 more than our recovery trade. We're approaching 300 now, 262. We did very good with using the NASDAQ to predict what the S&P was doing. Because without that, we definitely would have been stopped out. If I had chose to take the trade off of NASDAQ, that would have sucked. I think, in my opinion, we used that to the best of our ability, and it worked really well. Really, really, really well. Again, we're not moving that stop loss until I see that move go way past that 400 mark. It's got to go past the 400 for it to work. Otherwise, I'm not interested. I'm curious to know what would happen, though, is if we decided to move this around. It says protect position. I don't know what that means. I guess that means take it up to it, like take 200 and put it in the pocket while at the same time moving where we entered. I'm curious to know what that is. I want to remove my stop loss before I change that though. And I want to see this price hit 400. I want to see this green number right here hit 400 before I move the stop loss. I understand how stop losses work as well now, as well as limit buys and limit sells, or limit orders. Sorry, that's what they're called. Limit orders specifically in either direction. As soon as they hit, they are straight up executed. No questions asked. You have one take profit or one stop loss, and it just gets hit. Stop losses are essentially limit orders in the opposite direction. They're the safety net that saves you money. And then the limit orders are things you think, like, your best guess as to where price is going to go before it stops and starts heading in the wrong direction, right? And so you set it there for when it actually hits. So if it does fall in the opposite direction, you can re-enter the market and then replace that limit order at a higher point. It's kind of the dumb way of setting up the stop loss and then just adjusting that stop loss after entering the market, knowing you've hit take profit. Now you're waiting for it to hit your next take profit before moving it even higher. And again, we haven't experimented with that yet. We're waiting for that price to hit 400 before we move the stop loss completely up to where the entry is. And then from there, the entry higher, because we're looking for it to hit a take profit of way up there. Way up here. which I don't think it's going to. I don't think it's going to hit up here. That's just my opinion. If it does, yay. If not, oh well. Point made. Don't set my take profit so high. My question is, because I've like looked, right? I've gone across over here, right? And I'm actually going to mark, I'm going to leave this the take profit up there. I'm going to leave it where it is. And I'm going to put like a marker where we end today's video, today's trade, right? We're going to stop the video where we end. And at that point, or actually at the stop loss, if we get stopped out, because I'm looking at price barrel on down. If in the event we get stopped out, the video is going to end. If we keep going higher, of course, I'm going to move it higher because we want to take as much profit as we can from it. Same gist can be said, though. I want to leave the markers where they are. And I want to move to the left from these markers later on, and I want to see where other highs, where the most reasonably acquainted liquidity is for us. So when we do hit take profit 1, we're looking at a second take profit that is within reason and not a whole $2,000 higher than what we've initially entered at. Or it's not even a 2,000, it's like $1,000 from here up, from this blue right here all the way up to our next take profit. That's a little crazy, but at the same time worth the risk, because it was again a 1 to 4.5. Not bad. Not bad, not good, not much, just vibing. We may get stopped out at the $100 mark, but that's okay because we made it all back. Comment section, we made it back. We made it back just in time to see it fall apart. I'm going to protect this position right quick. I'm actually going to close this to right there. I'm not going to do that. I'm going to leave it right where it is. I'm going to be a big boy and take my loss like a man. Because either way we look at it, even if we were to lose $100 off of this right here, we technically hit take profit. This was our take profit, right? This was where we wanted to be. This is where we got. This is where we are ending, right? If we get stopped out, this is where we're at. We recovered almost $700. Almost $700 in a single day. Technically, had we have stayed in this trade and I managed to get the stop loss to work the way I wanted it to, we probably would have made close to $2,000 from here all the way up here. Even though that's not how that works from here to there, because that's incremental going up. Still, though, tis a potential choice on that mode. Really, really is. I feel like the long day at work is actually coming to a close. I'm just waiting for my coworkers to clock out so I can take them home, so I can put my head to the pillow and call it a night, because I am quite tired. No, that's not fake yawn either. That's me actually very, very sleepy. I've been awake for a while. Over 12, 13, 14, 15, 16, 17 hours now. I've been awake. Yeah. Sounds like a regular school night, except the sun's up. Yeah. Have we crossed the 1030 threshold? We have. We crossed that a while ago. At least we found our trade when we needed to. Wasn't even paying attention to that. Technically, we could have been out of here earlier if we wanted to, but I don't mind staying awake for a little more money. Just a little more. All we're looking for is one large spike up, too. Currently, we're in a downtrend because we broke structure, but that could change or we get stopped out. In either case, we got what we came for. We're gold. We made a recovery. We're not as red as we were a second ago, and we now know how to manipulate the stop loss to protect the position we are in. Of very I want to learn more by having price go higher so I can manipulate this next. Because this is the only thing, I see this button saying reverse position. I'm not looking at reverse position because we're not taking a short, we're taking a long. I want to ride this puppy all the way up to where it's going to go. But my question is, from this to this, if I take this all the way up to here, right? And then from there, it just collapses in on itself. I claim all the money between here and here, and I no longer have a stop loss. Can I move this higher? I know I can't move it higher than this bar right here because this is current price action. This tells us, hey, yeah, we're going to move this high up. So, what exactly is it that I'm going to be looking for on that note? Just a thought of mine, just a question I have. I'd like to answer myself. If I can answer it, it works for me. We already knew price was going to dance around where key level is, just above it. I'm tempted to say my idea was right, that we're going to see it cross that key level, dance in the sky for a minute. It'll consolidate, kind of what it's doing right now. It'll consolidate between these two price points because highest, lowest, right? And then from there, we're just waiting for a breakout. FOMC, per the last trade we had a breakout. It did, in fact, break out to the upside. We were just too impatient. We lost our trade. We were stopped out. As a result, that was the trade idea for the day that we failed on. It was the wrong idea. Oh well, big whoop. Not going to complain about it. But taking that into consideration when looking at this chart specifically, I want to say we're going to get stopped out. I want to say price is going to go lower from, guess what, this highway up here. I want to say it's going to go lower. Now, I want to protect this. I want to bring it up, but I don't want to. I want to see that hit a number before I do. I want to secure what I've got, and then from there, I want to see it go even higher. I want to see it hit at least one more take profit before I go to sleep. We might get very well stopped out, and that's completely fine with me. Completely. How about this? Let's take this down to 50. Boom. There we go. We made $50 off of that move. Bad idea in my opinion, but we're there. We're working on it. I think we're going to get stopped out at that $50 mark. Just so we're on the same page too, we won't be trading per any of the brokers in TradingView. We'll be taking trades off of a brokerage platform, HeroFX, for just to keep our setup similar to what TGR Trades does, so we're in the same boat, right? Not saying I'm gonna blame him for every trade I take, but that the best results come from consistency, and if it's not as consistent as can be, the trade's not worth taking, and as a result, I'd like to stay pretty well in tune with what he's doing, so that way every video he posts after that 5-hour video we were watching earlier to really dial in on the building blocks. It's a further teaching tool that I could use on myself to further learn the market and actually get it working and actually understand it to the degree he does. So in the end, I'm making profitable trades, actually making money, and I'm on my way through life, regardless of the goal I have. I'd like to implement it that same way I just described it. So at the end of the day, I'm gold all the way around. Oh, we were stopped out. Wow. That's okay. No biggie. We went from a negative $700 deficit to a negative $156 deficit. We only lost $50 on that trade, and that was after hitting a take profit where the trade idea was correct. Thank you guys so much for watching this episode of Orb Plus. I will see you in the next one. Peace out.